The markets may be closed, but the business stories are just heating up. I'm Robert Tan. Catch with us on Business Brief. Here are this afternoon's top business stories. Marcos signs 6.8 trillion peso 2026 budget, slashes unprogrammed funds to rein in spending. Filipinos put Washington first, U.S. tops trusted countries, China trails far behind. As U.S. Venezuela standoff intensifies, Philippines calls for law, safety of nationals. Geopolitical risks surge gold, push oil prices down. Asian stocks climb as investors react to U.S. Venezuela moves. President Ferdinand Marcos Jr. signs the 2026 national budget and slams the door on unprogrammed spending. He approves the 6.793 trillion peso General Appropriations Act after a week of review at Malacanang. Education leads with 1.34 trillion pesos. Health gets a record 448 billion pesos. Agriculture takes 297 billion pesos for modernization and farm-to-market roads. Social services get 270 billion pesos. Marcos vetoes 92.5 billion pesos in unprogrammed spending, citing fiscal discipline and safeguards.
The unprogrammed appropriations are not blank checks. We will not allow the unprogrammed appropriations to be misused or treated as a backdoor for discretionary spending. Its utilization is provided with safeguards and is only available when clearly defined triggers and tests are met, and will be released only after careful validation. My administration will enforce these safeguards without exception to serve the public interest and to advance our national development goals.
The budget sends a clear signal to businesses and investors, priorities, spending, and economic predictability for 2026. The DBM says no, the 2026 budget will not delay government salaries or benefits. The Department of Budget and Management responds to rumors circulating after President Marcos signed the 6.8 trillion peso national budget. The DBM says salary increases and retirement benefits for teachers, civil servants, and uniformed personnel will not be affected. Funds worth 24 billion pesos were not cut. They were simply moved to the appropriate agencies for more direct release. This ensures current employees receive their increases on time. Newly hired employees may be affected, but only depending on how fast vacant positions are filled. The government has already allocated funds to cover this. Pensions remain secure and retirement processes continue as usual. The DBM warns against misinformation and reaffirms its commitment to responsible use of public funds. Asean holds the leverage as the U.S. and EU target critical minerals. Industry experts tell Platts that the Asean bloc must safeguard their interests. America and Europe are eyeing nickel, copper, rare earths, and other metals for electric vehicles, renewable energy, and defense. China has long dominated processing, but the U.S. and EU seek ASEAN resources to reduce dependency. Experts urge ASEAN governments to negotiate carefully, capture maximum value, and avoid becoming pawns in global trade tensions. With the Philippines chairing the ASEAN Summit on January 20 to 26, Manila's leadership could shape regional minerals policy. For businesses and investors, ASEAN's critical minerals offer both opportunity and risk. Strong policy and strategic negotiations will determine supply, prices, and the future of the global energy transition. The Philippines urges restraint as tensions spark between the U.S. and Venezuela. The Department of Foreign Affairs warns the U.S. actions threaten regional stability and the rules-based international order. All parties must respect international law and the UN Charter. The agency calls for peace and the safety of all people, including Filipinos in Venezuela and nearby areas. The statement comes after President Trump claims a successful military operation capturing President Maduro and his wife. Trump says the U.S. will run Venezuela until a new government takes over. The region faces a volatile calm. Global markets, trade, and investor confidence could feel the ripple effects. And when it comes to trust, Filipinos are looking west. A new survey shows Washington leaves Beijing far behind. A Pulse Asia survey finds 82% of Filipinos trust the U.S. to protect the country's national interests. The Strat-based commission poll conducted in mid-December 2025 places the U.S. far ahead of other countries. Japan comes in second at 64%, Canada follows at 58%, Australia at 51%. China ranks near the bottom at 11% amid West Philippine Sea tensions. Strat-based head Dindo Manhit says Filipino clearly recognize China's aggression and its impact on fisheries, food security, and national dignity. For businesses and investors, strong trust in alliances signals policy continuity. It also shapes risk, trade, and investment confidence amid regional tensions. The crisis in Venezuela is roiling global oil markets, pushing energy prices higher and creating headwinds for countries like the Philippines. And to help us understand what this means for oil, inflation, the peso, and businesses, we're joined by Michael Ricafort, Chief Economist at Rizal Commercial Banking Corporation. Good afternoon, Michael, and welcome to Business Brief.
Hi, good afternoon, Mr. Robert, and to your viewers. Have a blessed new year, everyone.
Now, Michael, with reports that Venezuela's President Maduro is set to appear in a U.S. court and comments that further strikes are possible, how should markets interpret these developments, and are oil and gas prices reacting to real supply risk, or is this largely headline-driven volatility?
So far, Mr. Robert, oil prices have gone down a bit since this morning. Actually, since the U.S. invasion of Venezuela happened last January 3, when markets were closed. So it goes to show that markets are not bothered about anything pertaining to oil, although Venezuela is an oil-producing nation, about 800,000 barrels per day. That's less than 1% of the total oil output. So, because if you look at it very well, Venezuela is really one of the worst performing economies in the world when it comes to economic, GDP or the economy. Well, the latest data available was 2019, and during that time it was contracting like 25% because they had one of the worst hyperinflation in the world. The latest inflation data there was the latter part of 2014. It was like inflation was like more than 20%, and it came from, prior to the pandemic, it came from about between 5,000 to 10,000%. And if you look at the figures, terrible. It was even more than 100,000%. So it's really, the economy of Venezuela is mismanaged, despite the fact that it has relatively large oil reserves. So, of course, there are instances when the U.S. invaded countries. There are varied reasons, like, for instance, whenever there are crimes committed versus the U.S., like allegations of on illegal drug trafficking or trade, pertaining to weapons, conspiracy, etc. So, the precedents prior to Venezuela, in 2003, it was the invasion of Iraq. Because back then it was the weapons of mass destruction, the unfinished business during the Gulf War, and prior to that, it's the invasion of Afghanistan in 2001. Because Osama bin Laden and Al Qaeda, they were there. They were given.
Now, Michael. Looking at your observations now, even if political tensions ease, how realistic do you think is a near-term recovery in Venezuela's oil output, given years of underinvestment, sanctions, and infrastructure decay?
If the U.S. would be the one running Venezuela, there's even a good chance that things could get better, because it's really, really grossly mismanaged. The data is really bad in Venezuela. So, meaning to say, there could be, as Trump already signaled, the U.S. would invest in the oil infrastructure as it had done in the past, and there were even allegations by Trump that they have stolen the U.S. investments there because at some point the previous leaders of Venezuela, they seized and nationalized some of the U.S. Oil infrastructure and investments there. And if there would be more investments, it's going to tap the relatively large oil reserves, and that would be good. There would be more oil supply, and it would lead to greater prosperity
So,
and progress
yeah.
there amid corruption allegations also in Venezuela.
So, Michael,
Really,
having said that, do you think that even if the U.S. wanted American oil companies operating in Venezuela again, do you think it's feasible? Or is the bottleneck right now political, economic, or both?
well, it's maybe the template there is similar to what they did in Iraq, because similarly, Iraq has lots of oil and reserves at that. So yeah, maybe a similar template for these countries run by usually the template there. U.S. comes in other than crimes versus the U.S. It's really run by by this dictators and mismanaged economy, mismanaged there are governance issues, etc. So things would get better. There would be more supply of oil eventually, and some improvement on Venezuela's economy. And but we have to watch out
That
because
in the long run, right? But do you see any specific triggers that could turn Venezuela from a background geopolitical risk into a full-blown shock that reprices oil and gas globally?
Well, because potentially, there are other world powers involved in Venezuela. For instance, China is the biggest buyer of Venezuelan oil because that's premised on, because China is the biggest creditor of Venezuela. And also, China is also invested in the infrastructure of Venezuela as China usually does with countries that have financial problems and fiscal problems. So because it's also allied with the likes of the allies of China like Russia, Iran. So it's that those are the opposite side of the spectrum.
Now, are we already seeing the effects of what happened? Are current oil and gas prices already reflecting Venezuela-related risk, or is the market right now underestimating the potential for a sudden repricing?
Well, because now we're just starting the Europe trading since the invasion last Saturday, and we will see later on in U.S. trading. But Asia is a large market, and now with Europe, so it looks like maybe they're seeing better things ahead for Venezuela because it's by the looks of it. There is so grossly mismanaged, even the oil infrastructure, even overall economy, the hyperinflation, and then that reflects on the economic contraction in recent years, the deterioration. So everything would be better. Hence, especially if U.S. is eventually given a chance, similar to the template that it applied in Iraq, in the sense that eventually they would have their fully functioning government based on democratic principles. Of course, trying to fix all the problems that and the constraints that there have been. Of course, it's just it's just the related geopolitical risks. Say if there would be some reaction from the likes of China and the other allies of Venezuela, but nonetheless. Maybe still wait and see though. In fairness, give it a few days or maybe a few weeks to really fully factor in and come to terms with what would be the likely reality.
Because it's actually pretty fresh right now. But do you see this, what happened over the weekend, being understood as a live experiment in how sanctions and political isolation reshape an economy? And is that something China is closely studying in the context of Taiwan?
Well, those are very different things, Mr. Robert, because U.S. is trying to fix countries with well, problems on when it comes to leadership, especially this rogue dictators and very very problematic mismanagement of their respective economies. But China is very well, Taiwan is very a very progressive and advanced country, so there's no problem there. So it's not comparable because, well, it's the Monroe Doctrine in Latin America. Well, the precedents there in Latin America was in 1989 during the invasion of Panama. Through its leader Manuel Noriega, which has a well charges by the U.S. on or related also to illegal drug trafficking and racketeering, and of course other than that there's also key important interests like the Panama Canal. In Venezuela there's oil. In Iraq, there's also oil, and in Afghanistan,
But
of course.
what happened over the weekend? Now, for the Philippines, as a net oil importer, how quickly do you think these shocks in Venezuela or global oil volatility more broadly translate into inflation, peso pressure, and higher household costs back here?
Well, so far, at least the signs are favorable as of this morning. Well, because the chance to fully reflect the risk factors may already be now, within this day and maybe in the coming days. But so far, oil has gone down slightly. It's like the NYMEX oil is trading like even below 57, around 56 levels at some point. It's slightly lower, and it's among the lowest in a week. And
do you think it's still going to go lower in the next coming weeks?
Yeah, because to start with, Mr. Robert, even before this factor on Venezuela, global oil prices have gone down to near the lowest levels in 5 years since March of 2021 because, because of the global economic slowdown, because of the higher tariffs, the trade wars, and protectionist measures to slow down the world economy, and of course, this continued slowdown in China. China is the world's second biggest economy and the biggest importer of oil and many other commodities. It has been it has slowed down for the past 2-3 years because of property woes, and of course the broader slowdown in the world economy because of the various interest rate hikes to rein in and to bring down inflation, which the central banks in the world have successfully did. So that's why, demand is still soft, and the world is,
I guess, it's a wait-and-see factor right now in the next coming weeks. But finally, Michael, what should Philippine policymakers now and businesses be doing to prepare for potential oil price volatility rather than reacting only after prices spike or if it goes down?
Yeah, true, Mr. Robert. This has been a challenge for the past 20, 30, or 40 years. That's why countries have, even the Philippines, have reduced structurally the reliance on imported oil. So that's why even 30 years back or so, the country has increased renewables like geothermal, hydro, and now the better technology like wind. The Philippines is expected to have one of the biggest rollouts of new supply for wind power in the coming years, and say with solar also, and of course still with hydro. So it's really the shift to renewables, even geothermal, because at some point the Philippines is like, at some point number 2 in the world.
You see this as a more positive outlook? You see this more as a positive outlook right now?
Yes. Generally, it's like the world is seeing that better things to come for Venezuela because it's really so bad situation there. So it can only get better now if you are to think of it very well.
That's good to hear, Michael. But on that note, thank you very much for your time, for your insights. Michael Ricafort, Chief Economist of the Rizal Commercial Banking Corporation. Thank you, Michael.
Yeah, thank you so much, Mr. Robert, and your viewers. Happy New Year.
Meanwhile, 647 million pesos in scholarship funds remain unaccounted for years after being released to schools. The Commission on Higher Education has not liquidated merit scholarship program funds sent to institutions in Regions 4B and 12. The unliquidated amount covers 2019 to 2020 through 2023 to 2024. The Mimaropa region accounts for 12 million pesos, while Soxalgen holds 635 million pesos. Without reports, auditors say the funds could be misused. CHED says it is helping schools submit liquidation documents and sending demand letters. The COA recommends stronger oversight and withholding future releases until compliance. U.S. stocks closed 2025 on a high. The S&P 500 jumped 16.39%, beating many global markets. Tech gains and broad earnings growth keep corporate profits strong. Analysts say investors are sticking with U.S. stocks, banking on the stable dollar and AI-driven growth. Strong U.S. markets could mean a more stable peso, easier access to capital, and potential boost for exporters and investors relying on U.S. trade. Oil prices remain choppy as investors react to the U.S. capture of Venezuelan President Nicolas Maduro and a week of calm uncertainty in economic data. Economists say the move won't hit economies immediately, but it could lift oil prices and spark geopolitical tension. Japanese, Korean, and Taiwanese markets rise more than 2%, while gold and the U.S. dollar gain and global risks concern. Higher oil prices could push up energy costs and import expenses, affecting businesses and household budgets. Asian stocks climb as investors react to the U.S. capture of Venezuelan President Nicolas Maduro and prepare for a busy week of economic data. Economists Neil Shearing of Capital Economics and Marco Papik of BCA Research say the move has limited near-term economic impact but could support oil prices and create geopolitical uncertainty. Japanese, Korean, and Taiwanese markets rose more than 2%, while gold and the U.S. dollar also gained amid heightened global risk concerns. Reviving Venezuela's oil industry could cost over $100 billion and take years. The country's oil infrastructure is heavily damaged and the road to recovery is uncertain. Experts Francisco Monaldi and Lino Carillo say major players Chevron, ExxonMobil, ConocoPhillips will hold off until political stability takes root. Secretary of State Marco Rubio says U.S. firms are ready to chase Venezuela's heavy crude. It's vital for Gulf Coast refineries, but sanctions and political chaos could keep investors waiting. U.S. President Donald Trump warns a second military strike on Venezuela could happen if remaining officials do not cooperate, raising the possibility of further interventions in Latin America. U.S. Secretary of State Marco Rubio and Venezuelan officials, including Interior Minister Diosdado Cabello, warn of ongoing political tension and a blockade on oil shipments amid the capture of President Nicolas Maduro. Trump says U.S. oil companies must gain total access to Venezuela's reserves, while sanctions, political uncertainty, and international scrutiny could delay action. U.S. President Donald Trump warns a second military strike on Venezuela could happen if remaining officials do not cooperate. The move raises the possibility of further interventions in Latin America. U.S. Secretary of State Marco Rubio and Venezuelan officials, including Interior Minister Diosdado Cabello, warn of ongoing political tension. A blockade on oil shipments followed the capture of President Nicolas Maduro. Trump says U.S. oil companies must gain total access to Venezuela's reserves, but sanctions, political uncertainty, and international scrutiny could delay action. Continued instability in Venezuela could mean volatile oil prices, higher import costs, and pressure on energy-dependent businesses and households. Share prices in Asia are mostly higher. Gains are seen in Hong Kong's Hang Seng, Indonesia's JSX Composite, Pakistan's KSE 100, Japan's Nikkei 225, Thailand's SET, and China's Shanghai Composite, while Australia's S&P ASX, All Ordinaries, Malaysia's FTSE Bursa KLCI, Vietnam's HNX 30, and India's BSE Sensex trade lower. In currency markets, the US dollar strengthens against the Japanese yen, Singapore dollar, and South Korean won, but weakens versus the Hong Kong dollar and Thai baht. The Australian dollar declines against the greenback. In commodities, gold rises over 2% while oil prices fall. In crypto, Bitcoin gains more than 1% and Ethereum remains flat with an upward bias. Philippine stocks rise in the first trading day of the week. The PSEI closes nearly 0.5% higher to 61.64. Majority of the sectoral indices are in the green, with mining and oil rising the most at nearly 3%. Advancers outpaced decliners 133 to 93, with value turnover at 5.7 billion pesos. The day's most active stocks are mixed, with ICTSI rising the most at almost 3%. SM Investments fall the most at over 1%. And on currencies, the peso is currently trading at 58.89 against the US dollar, down from the previous close of 58.84. Gold prices spike as the U.S. capture of Venezuela's top leader triggers safe haven demand. Precious metals climb Monday amid escalating geopolitical tensions. Spot gold hits $4,406.77 per ounce, a one-week high. U.S. February gold futures rise 1.9% to $4,413.40. Analysts say Venezuela's crisis pushes investors to seek protection, driving gold and silver higher. The gold surge reflects heightened risk aversion. Geopolitical unrest affects portfolios, local markets, and investment sentiment across the country. Top gainers early today include Oceana Gold Philippines, up 4.53% to 35 pesos 75 centavos. Apex Mining rises 3.24% to 12 pesos 76 centavos. Lepanto Consolidated up 2.78% to 18 centavos. And Philex Mining climbs 2.62% to 10 pesos 20 centavos. The graphic shows the leading stocks by percentage gains, highlighting Oceana Gold, Apex Mining, Lepanto Consolidated, and Philex Mining. The most active stocks in early trading are also Oceana Gold, Apex Mining, Lepanto Consolidated, and Philex Mining, with Oceana Gold up 4.53% and Apex Mining up 3.72%. Mining stocks are driving early market momentum as investors focus on strong buying activity. And that's a wrap for today's Business Brief. I'm Robert Tan. Join us again tomorrow for the stories that help you plan your next big, bold business moves. Only here on BNC, the Bilyonaryo News Channel.